All right, we're rolling. Hey guys, what's going on? This is Jalapablo. Real quick Bitcoin brief video where I think we are in Bitcoin right now. We'll take a little break from our traumatized token series and we'll focus on Bitcoin. And I'll put out another video on traumatized tokens real soon. But I wanted to focus right now on the king of crypto, Bitcoin. So here we go, guys. Not good. I see there's a lot of supply predominance right now in the volume, in the vertical bar volume, and also in the Weiss wave down here. So we had the macro wedge here, where the big where we broke out. We had this last dump back at the end of August, and then we came back up. We came down to the trading range resistance where the automatic rally was on this macro range. Came back down, and then we went back up and retested the macro trend support, and that's where we bounced back off right here. See, I had retest and failure to rally. Despite this rather large demand volume spike, it didn't amount to much. We weren't able to penetrate micro trend support, so we came back down, and now we're back at trading range resistance. Remember, that's the AR point. That's here. That's the top of this range right here. And then the bottom, of course, is a selling climax. That's trading range resistance, trading range support. Or rather, trading range support, trading range resistance. And then we came back down to the secondary test, came up to the 0.5 Fibonacci, which is trading range midpoint, bounced off it, and we came back down for the secondary test in B. And that was the low that we had back in the day, back in November. That was the 15.5 or whatever it was when we came down here. I think we're coming back down to remitigate this low at some point. Usually you'll see in these Wyckoff accumulation ranges that the secondary test in B, or the sign of weakness, mitigates usually the spring. It comes back down at some point. Here it remitigates. So let's just say hypothetically the price action came back down here. It would mitigate somewhere here. That would count as the terminal shakeout before the macro pump that comes and begins in effect the new bull cycle. And so that could happen next year. That could happen in March. That could happen in February. We could see like a dump where we could go back down to remitigate the secondary test in B. We could see that sometime maybe in October or November of this year. So that's entirely possible. And then we'll go back up. But for right now, it's looking bearish. We've got lots of... if you notice all these points here where the price action is hitting these crucial junctions, there's 4 crucial junctions on this on this map here. So on this chart, we've got the rising wedge, we got the and then which has the support and resistance on the wedge, and then we have the trading range, which has support and resistance. Now, of course, the wedge is the trend, and those are the diagonal dotted yellow lines, and then the trading range has the horizontal lines, straight lines, okay, and that's support and resistance. Every time the price action touches one of these 4 lines, it's really important to look at what the volume is doing. So like say here and here and up here, you see all this volume that's coming in when the price action hit this last one up here at this UTAD. We had a large amount of demand volume coming in, but it didn't do anything. That's a lot of effort, but very, very little result. And so that goes against one of the Wyckoff law number 3. And so that's actually a bearish sign. We got all these bids coming in, but there's no value. So what happens? The price drops is what we saw. And so that amounted to what we saw as the UTAD, and then it came back up and all that. But the point I want to make is there's demand, but there's no volume. And then here at the macro trend support, we're seeing very, very low demand coming in. So right here, you should be seeing a bunch of demand, and it should propel this price action, but it's not. It's very low here. And also in here where the demand did not equal the result. And then again here, where we came through, there's absolutely no demand at all. It's all supply. So I expect a continuation of the same. And okay, this has been 5 minutes, so I just wanted to make this real brief. Look for the price action maybe to try another retest, and then maybe go back down on these Fibonacci retracements to the 1.272, which is 22.8, to the 1414, 21.7, and to the golden fib retracement 1.618, 20,000. and then eventually going back down. But in here we can see some consolidation until we conclusively go down to the terminal shakeout area of at least 15.5, remitigating these lows here. I think that's inevitable. Water always seeks its own. It's going to refill this liquidity void, and then and only then can we expect to see the macro reversal. All right, guys, 5 minutes. Hope this was helpful for you. Like, subscribe, and we'll talk to you again soon. Gots to go. Bye-bye.